Ladies and gentlemen, on behalf of Credit Suisse, it is with great pleasure that I welcome three distinguished speakers today. My introduction, forgive my informality there, but Pak Khatib, Dr. Basri, is an advisor to the Indonesian government on their investments. Pak Mirza works with the Deposit Insurance Scheme, and Pak Robert here is Credit Suisse's very own economist. As I have been reminded, the old jokes are the best jokes, so we have three economists here, basically, it's fair to say, trained economists. Therefore, we'll have at least 6 views and possibly no conclusion. But what I can guarantee is that we will be learning a lot about Indonesia today. The format, and I realize I've not briefed our panelists on the format, I am going to attempt to ask a few questions of the panelists, and I will be throwing it open to the floor for Q&A, so no formal presentation. Now, the number one question that I always get asked about Indonesia is the currency. And a former colleague once summarized it as what is more important, 10 or 100, referring to 10,000 on the rupiah or 100 billion in terms of the reserves. What is government policy on the currency? And Pak Khatib, could I ask you to start answering that, please?
Well, first of all, that we have to understand that the central bank is independent in Indonesia. So, of course, the government does not have this intervention on this exchange rate policy. It's entirely left to the central bank because this independency that we adopted since the year 2000, if I'm not mistaken, 1999 or the year 2000. But of course, it's very difficult for me to speak on behalf of the central bank, but to the best of my knowledge is if there is an intervention on the market from the central bank, usually it's just for the smoothing the volatility rather than pegging the level. Yeah, because in our experience in the past, intervening the market for the certain level of exchange rate not been very successful. So the idea is just to reduce the volatility in order to produce somehow the stability of the exchange rate rather than keeping the exchange rate at a certain level.
Robert, as an independent economist, what do you see going on with the currency?
Well, we've seen, obviously, the currency depreciating reasonably rapidly over the last 18 months, and the central bank has been intervening every now and again. Indeed, in the middle of last year, it was intervening to weaken the currency rather than to strengthen it. I think there was and still is to a certain extent, a preference to have a softer rupiah than a stronger rupiah, and partly because, or largely because, it is seen as the best means of dealing with this current account deficit, which, as you all know, has gone to a level which is perhaps slightly uncomfortable for the central bank. As we understand it, the line in the sand for the central bank is something like 2% of GDP as current account deficit. It's clearly beyond that. I think it will remain beyond that, and as such, I would expect the currency to come under further downward pressure in time. The central bank's role has been interesting, I think, recently. It clearly has intervened to smooth the volatility. I think it was threatening to go rapidly through the 10,000 mark, and therefore I think we saw BI intervening. We know it spent nearly 7 billion in terms of FX reserves in January and February to prevent that from happening. My sense, as I say, as long as the current account deficit remains clearly above 2% of GDP, and I think it will, then the central bank, once things have calmed down, and clearly have calmed down to a certain extent, they will again let the rupiah depreciate, and quite possibly through 10,000 if in an orderly fashion. So going back to your original point, Steve, I think whether the 10,000 matters more than the 100 billion. I think what we're going to see actually is it going through 10,000, but also FX reserves coming below 100 billion. And we shouldn't panic, I think, about that. 100 billion is still equivalent to something like between 5 and 6 months worth of import coverage. It's still about three times short-term external debt. So this is, this is still a very comfortable level of reserves, and certainly what we're not talking about is some sort of crisis situation.
Thank you. And on that current account deficit, Pak Khatib, what are the main causes for the build-up of the deficit?
Well, let me looking back about the history of Indonesian economy. I apologize, we have to start from 1969. From 1969 until 1996, we only ran a current account surplus 2 times. Was 1979 and 1981. So the normal rule for Indonesia is running a current account deficit. And this is a very simple explanation. If you are a macroeconomist, you have a strong investment, then you're going to run a current account deficit because your saving is less than investment. So when the Indonesian economy grew by more than 6%, 6.5%, and definitely the current account will be deficit. And 92% of our import is made up of capital goods and raw materials. So that is why I'm not too worried so much about the issue of this current account deficit. I'm worried so much if we are running a current account surplus, because it means that the economy is slowing down. What we had this current account surplus back on 2009, when the economy grew by about 4.5% at the time. We had this current account surplus during the Asian financial crisis. And in addition to that, look at the capital account. On the capital account side, it's dominated by the foreign direct investment now. But there is some issues that we need to concern about this current account, which is import oil. Yeah, if you look at, even though this is only 20% of the total, but this is the thing that we have to look at carefully. Why? Because the fuel subsidy that being implemented in Indonesia create a price disparity between the domestic price and the international price. And this creates smugglings, which is later on pump up the consumption from domestic, making the Indonesian government continue to import. So unless we do something on the energy policy, then this may create a problem. But overall, current account deficit, you mentioned about 2%, 3%. I'm not so worried so much, unless on the capital account is financed by the portfolio. And I think the situation is quite different now.
And on this current account, as you say, the obvious way to mitigate it, the way to that you can control would be to raise energy prices. Pak Mirza, why do you think it is that the president has been so slow to raise fuel prices? Now, naively, I'm thinking, well, this is his last term. Surely he'll want to leave a legacy and do the right thing.
I think Pak Khatib should answer this rather than me.
I'll add to you later on.
Okay, my job now is not head of research. My job now is to guarantee deposits. Yeah, we as a IDIC, Deposit Insurance Corporation, is Indonesia FDIC. We basically member of the Financial Sector Stability Committee. So this is a new structure in Indonesia since November 2011. So now 4 of us, Minister of Finance, Bank Indonesia, Indonesia FSA, and our institution, Indonesia DIC, we meet regularly every month, and on the minister level is every 3 months. And we know the situations, as Pak Khatib say that we are not too concerned on the current account deficit, as long as this is around the, below 3% of GDP. We are more concerned on the balance of trade deficit because of the too much oil import. And too much oil import is because too cheap the fuel, domestic fuel price. And we are an independent structure, even though Minister of Finance has to report the President, but we as a 4 institution, we we make a recommendation to the presidents that we have to handle this situation before it is too late. And yeah, we are waiting for the decision. But actually, we believe that in Indonesia, the government cannot go beyond 3% of budget deficits. So there is a limit for the governments actually to have this kind of situation, and we believe that at the end the government will make the right decision on the fuel price.
May I add on this? Well, Stephen, this is not only unique in Indonesia. One thing that we learn of the decision-making process all over the world is good times makes bad policy and bad times makes good policy. So if you want to launch the reform, you have to wait until the good time, at the bad times. The question to the politician is why the politician would like to spend the political capital if the economy grew by about 6.2%, whereas other parts of the world struggling between 0 to 1%. Why we should jeopardize our political popularity? This is the way the perspective I'll give to you. I'll share with you the way they look at this issue. But somehow the economic rationalism will push into the situation in which the decision maker has to make a decision on it. Yeah, this is not something new. I've been doing it 3 times. 2 times in 2005, we adjusted the fuel price by 120%. It was very difficult to convince the politician at the time. 120% and 30%, and we did it also again 2008 by 30%. Yeah, but the process is not always easy, just like you come, look, you have to adjust the fuel price. The thing that you need to do is you to prepare about this allocation of the budget for the poor people, the direct cash transfer, the school operational assistance, the allocation fund for the health system. And because of this allocation for anti-poverty, then you need some money. Then you relocate this money from adjustment of the fuel price. So the idea is not adjusting the fuel price, but by targeting the subsidy to the appropriate person. Because by having this fuel price adjusted by the fuel subsidy, you basically subsidize the middle and upper class. That's the basic adjustment. If we can do these kind of things, of course this is not easy, and I do believe this is doable. So I'm quite optimistic, even though the process is always like this, but we end up at the end of the day with the situation what Maggie Thatcher called it TINA. There is no alternative.
One of the good policies has been the land acquisition bill, which obviously was long awaited and happened. Was it a year ago or a little over a year ago? When do you think that can become reality in terms of actually seeing real infrastructure being built?
I would say that, well, perhaps for some of you not really familiar with this new land bill, the good thing about this new land bill is if you have a dispute about the land price, this will be settled through the court within 90 days. If you disagree, then you can make appeal, and that will be settled within 18 days. But unfortunately, this new law will not apply for the new projects. Will only apply for the new projects, not the existing one. Because if you start with the existing one, you have to start over about the process of bidding, etc. And there is a transition period about 200 days started last year. So it means that by starting 2015, I do believe that the major project of infrastructure that could be handled under this new law. And for your information, 12 airports will start to operate this year. Yeah? So I think we are making progress, even though we have to admit that this progress is relatively slower than what we expected, Stephen.
Thank you. When you look at Indonesia versus its regional competitions, and obviously you're just on an ASEAN panel, but obviously the competition is more than ASEAN. Where do you see Indonesia's sort of regional competitiveness? And I might just start with Robert first, then Pak Khatib, if I can, afterwards.
I mean, Indonesia clearly offers huge potential. I think we can probably all agree on that. But then it's offered huge potential for a very long time. And I guess the key question is, what has changed, and as you say, what has changed relative to other countries? Clearly, this is not just about Indonesia. All ASEAN countries, many countries around the world, hundreds of countries around the world are competing for a limited pool of investment. Now, if we take the raw statistics, which are not necessarily the be-all and end-all by any means, but I think are worthy of note, at least quickly. What worries me slightly is that Indonesia hasn't really shown much improvement in things like ease of doing business or the Global Competitiveness Index. It has shown some improvement in terms of corruption perception. So, things generally, and perhaps surprisingly, don't appear, at least on the basis of these international surveys, to have changed dramatically. And I think that's of concern. Also, again, just playing devil's advocate here, I worry if some of the government's recent reforms, recent measures, particularly in banking and in the resource sector as well, may risk deterring some foreign investors. We've seen
these reforms are.
Well, the measures, in terms of taxing some ores, whether or not Indonesia, what they're going to do in terms of coal exports and coal taxes, what the rules are with regard to foreign ownership of domestic banks are going to be, and so on. Now, I think a lot of this, to be fair, should be seen as a normalization. Indonesia was incredibly open to foreign capital, and with good reason, obviously, following the Asian financial crisis. It was desperate to get foreign capital in, and obviously now with foreign capital flowing in, that desperation is no longer there. So it's, I think part of this, perhaps a large part of this, is trying to recreate a level playing field. But I guess it's perhaps more the uncertainty that is being produced here, which threatens foreign investment, and we've seen various anecdotal evidence and so on to support that. Also, I was just seeing in the Jakarta Globe yesterday that the Fraser Institute, which is a Canadian-based survey, said Indonesia was the world's least attractive place to do mining business. This was out of 96 countries. Now, again, that seems a bit odd. To me, it seems a little pessimistic. But again, perhaps it raises some interesting questions there.
Well, thank you, Robert. This is really the comment that I would like to hear, because I can give, rather than to answer your question, Stephen, if I can respond to Robert's comment. The first one is regarding the ease doing business. I completely agree. Indonesia is not a paradise. If you come to Indonesia, one thing that I can promise to you, you're going to see problems. As the chairman of the investment board, the only promise that I can share with you, you're going to see problems. And that is why the investment coordinating board was established to support the investor in walk through all the process. So let me share with you, even though this is a very interesting, the IFC put us on the rank 128, slightly improved from last year, 129, basically no improvement. The interesting part is the IFC doubled their investment from 300 million to 600 million. So my question to IFC, I'm afraid that you don't believe your own report. Yeah, but let me share with you about the things that Robert concerned about the ease doing business. This is the serious things. Time to start up business. But if you want to do reform in a country like Indonesia, you somehow need to start with the success story. Don't start with the uphill battle. You can solve the problem of corruption, etc. But you have to create a success story. Using the one success story, you're going to convince other line ministries, the local government. So let me share with you about I've been doing in my office in the last 6 months. Many Indonesians become religious once they have to deal with the government. Because once you have to submit your document in dealing with the process of licensing, you will never know what's going to happen in the future. The only thing that you could do, you only need to pray. right? So this is the reality, Stephen. So I borrow this idea from the Amazon.com. Every time I bought a book from the Amazon, they always provide me with the URL. So if you click the URL, they can tell you the status of your book. So now in my office, if you invest, we'll provide you with the PIN. Then you can trace in which table your documents stuck. I know all of you are professional complainers, so I have to channel your hobby, right? I have to channel your hobby in complaining. If I ask my staff to supervise this, they're gonna tell me all things are good. But if I'm letting you to monitor this process, this will push us not to stay lazy. And this worked. In the last 4 months, every day about 600 investors monitoring this process, and they come and complain to me. So what I'm doing is just, I forwarded all this message to my deputy and my staff. Look, they are complaining about it. Now, if you register in Indonesia, it costs you only maximum 2 days. For the facility, you're asking for about 10 days. So we improved the situation. But I do understand it's limited in my office. But luckily, 2 months ago, the president instructed me to extend this project, not only at the Investment Coordinating Board, but also to other line ministries and also with the local government. So this is just one example. Another example, if you are an investor, it's unlikely for you to fly from New York to Indonesia just to gather information, right? Because it's too expensive. The first thing you do is you just check at the website. But what do you find at our website? Nobody understands it because it's too technical. So what I'm doing now is just put the investment for dummies. Unless you cannot read, you won't understand the process of this investing. If you don't get the information on the website, you're gonna call. So I tried to call my own office. You know what happened? They didn't pick up the phone, right? And this is the reality. If you send an email to Indonesia, they don't reply email. So the first thing I did, instruction as the chairman of the investment board, I start the reform by picking up the phone and replying email. So I request them to record every conversation with the investors. Now, randomly every 2 months, I check in which area they need a training. This is just an example. The second issue that Robert raised is about this, a kind of economic nationalism related to the export tax, etc. 2 reasons for this. We learned from the economic history development, there are 3 countries entered the middle income. It was Brazil, South Africa, and South Korea. And only South Korea managed to become new industrial economies. Why? Because they don't want to rely only on natural resources or cheap labor. They move into innovation. So if Indonesia needs to move into value chain, somehow we have to do a correction of our policy. It doesn't mean that we are no longer in the garment business, but rather than producing a cheap garment, we produce batik, which is suitable for this, the growing middle class. The second reason, we have to be fair. One of the issues in the trade policy is always about what we call the tariff escalation, in which the developed countries impose lowest tariff in raw materials, but relatively high tariff on the finished products. This became the issue of WTO several years. So the world itself biased towards structural protection towards the finished products. So unless we do a correction, otherwise all the products of the developing countries will focus only on raw materials. And this could be dangerous for the environment. Yeah, so I think that's the main reason why the government restrict and import and export tax for some of the products. I hope I answer your comment, Robert.
Can I have a question there? Because people have raised the argument that Indonesia is obviously not really officially in the middle-income trap. I mean, it's a low-income country, and therefore it's a bit perhaps too early to worry about the middle-income trap now. And to the extent that this pushes Indonesia out of the commodity space and so on, potentially higher up the value chain, is the skilled labor force there to meet that potential demand?
Well, I think it's not, well, we always said that we are too early for everything until we are very late. This is, I think, now the situation in Indonesia, one of the issues in my view is we do have this young population, the demographic bonus. But if you don't fill this demographic bonus, the young population, with good human capital in terms of education and health, this will end up with demographic catastrophe. So unless the government do something on this innovation, that is why this is the thing that I'm working on. I've not been very successful to convince my colleague Minister of Finance. My suggestion is ask the private sector to do an R&D or training and give a tax deductible, rather than the government institution create a training center, which is not really matched with the required from the companies. So my view is, I think we have to be very careful about the issue of the middle income trap from the beginning, because if you look at the situation of countries like Brazil and South Africa, since the mid-80s, because they have these resources countries, and they are not prepared for that. And I think we have to learn from that process, and Indonesia want to avoid that.
Talking on another ASEAN country, Philippines, one of the reasons for recent success in the Philippines has been the repatriation of money that's been fleeing the country for 30 years. Looking at Indonesia, the wealthy Indonesians, are they bringing their money back into the country? The indications are, if you look at the sources of FDI in terms of country, big slug from Singapore, which is obviously a well-known banking center for Indonesian capital, but then there's sort of Mauritius and British Virgin Islands, which should also indicate this is money that had previously fled the country. If this is the case, this is a really positive sign, as in if the locals believe in the long-term future of the country, then as foreign investors, we have nothing to worry about. What do you see anecdotally or in reality?
Well, you want me to? Okay.
Right.
Okay. The remittance in Indonesia, the official number is about $8 billion per year. So I think, and I do believe that the real number would be larger than that, and definitely larger than that. So it seems to me that this flow of the capital through this, the remittance similar like the Philippines, even though maybe not as big as the one in Philippines, perhaps somehow it also reflects the situation in Indonesia, because one of the potential and this is not only for the Indonesian migrant who works outside and put the money back. In Indonesia is huge a market, because we are talking about 48% size of the economy of the total Southeast Asian. So in my view, if you're talking about this, people start to look at Indonesia, not only Indonesian, start to putting the money back in Indonesia, even though maybe in Singapore they put through the other name, to the nominee, etc. But even the foreigners start to sort of like look at Indonesia on this process. Last year, Stephen, the Investment Coordinating Board booked a commitment of investment, $86 billion, and the realization itself is $32 billion. And if you ask me, is it because we are doing great? The answer is combination of both. Good policy response and good luck, because we are the least unattractive country in the world now.
But Mirza, do you have any anecdotal evidence of what your wealthy Indonesians are doing with their money? Are they bringing it in, or does it continue to flow out?
And how much of it is in property?
Okay. Indonesia DIC, we guarantee 2 billion rupiah, or around $200,000 per account per bank. This we increased from $10,000 to $200,000 during the global crisis, the 2008, because our neighbors increased the deposit protections during the 2008 global crisis. But when our neighbors reduce it back, we have not reduced it back to the previous level. The 2 billion rupiah that we guarantee, there are about 110 million accounts, banks accounts in Indonesia. And our guarantee cover 99.9% of total accounts in the country. But in terms of value, we guarantee 47% of value. Of the 110 million deposit accounts in the country, about 180,000 accounts represent 53% of value of deposits in Indonesia. That's, I think, the market for private banker. Yeah, in Singapore, in Hong Kong. we don't have the real data. I think private banker know more, but I believe that some of the Indonesia government bonds is bought by the rich Indonesian. And now we see the development in the corporate bonds that used to be very, very illiquid market, corporate bonds in Indonesia. But recently, corporate bonds, even the property company, finance company, corporate bonds is relatively very good demand and oversubscribed. And we believe the demand come from the rich Indonesian that's put their money in overseas. So actually, the money is coming back in terms of financing the corporate bonds and also the government's fiscal deficits. Yeah. I want to answer your question about the banking's ownership. Maybe this is more noise rather than the reality. The noise when before the central bank issued the regulations, noise is about that Indonesia restrict the foreign ownership. But actually, when the regulation issued in last June about the bank ownership, it says that there will be banks assessment on this year, and the banks will be divided into 5 categories, 1, 2, 3, 4, 5. For those banks that fail to be in the category 3, 4, 5 in the soundness rating and in the governance rating, so the owner, they have to divest within 5 years. If the bank is owned by financial institution, the maximum ownership is only 40%. If the bank is owned by corporation, the maximum ownership is 30%. And if the bank is owned by individual, the maximum ownership is 20%. I believe that the good investor in banks, the Southeast Asia banks that own banks in Indonesia, or the good investor that own banks in Indonesia, I believe they will be in the category 1 or 2. If they are in the category 1 or 2 in the soundness rating and in the governance rating, meaning they can keep their ownership as it is. So actually, the problem will be for the individual and domestic corporations own bank. That probably they fail in the category 1 or 2. Yeah, and they have to divest. They have to divest, and they have to find a good partner. It can be a foreign to make the bank strong to be in the category 1 or 2. So more noise than reality. If you ask about Danamon, DBS, probably that will be the next question.
Who decides whether it passes?
It's the central bank. It's the central bank. And then the central bank jobs will be transferred to Indonesia FSA, or in Bahasa we call it OJK, next year. On DBS Danamon. Okay, I have to say like this. Indonesia has been very open since big banks, deregulation in 1988 when we opened for joint venture license. And in 1968, we opened for foreign bank license. And then during the divestment of IBRA during the Asian crisis, we again opened the ownership up to 99%. So now in Indonesia, we have 15 full brands of foreign banks. We have about 25 of joint venture licensed bank. And we have national banks license like CIMB Niaga, Danamon, Permata that is owned by foreigners. Danamon now is a national license. OCBC and NASP is national license. UOB, Buana is a national license. DBS is a joint venture license. Joint venture license, they can open only in 10 big cities in Indonesia. So I think I'm not speaking on behalf of central bank, but this is in my view that what the central bank is waiting is just a relaxation, I think, in Southeast Asia, for Indonesia Bank to operate in Southeast Asia. Not necessarily they can make profit in Singapore and in Malaysia, but just an equal treatment, because Indonesia already gives so many licenses to Southeast Asia banks. Why Mandiri, BRI, and other banks cannot open even full branch in Singapore or Malaysia, cannot open ATM outside their own office in Singapore or Malaysia? It's very difficult. Just an equal treatment.
Fair point. Indonesia is very good at producing billionaires.
Producing, sorry?
Indonesia, very good at producing billionaires. Possibly one of your best exports. Key thing for the future is, are you creating a middle class? Is it filtering down? Pak Khatib, do you see that happening? And then I'll ask Pak Mirza whether you see it in your deposits.
Well, certainly, I think, well, okay, let me talk with the number first now. If I just use this current standard of the middle class in Indonesia, it's perhaps not entirely comparable with your standard about the middle class. But if I use this $4 per day per capita as minimum spending, yeah, in 2003, the percentage of people who spend at least $4 per day per capita was about 5%. In 2010, the percentage of this group jumped to become 18%. So the increment itself is about 13%. If you multiply by 240 million, you are talking about 40 to 50 million. And this number of population even larger than Malaysia plus Singapore plus Australia together. And if you look at, well, report done by McKinsey, they are talking about 135 million consuming class with the spending at least $10 per day per capita. And I do believe, and the simple anecdotal evidence is, you know, Stephen, one of the weakness of Indonesia, they don't understand the concept of RSVP. If you invite them, you expect them to do an RSVP, they never reply back. Because in every party, every time we go, we always get the food. We don't need to make a reservation. But no, if you come to Indonesia, you go to the fine dining restaurant, if you don't make a booking, you won't get a table. And it didn't happen about 10 years ago. In the past, we only queue for watching soccer or badminton. But now, we are queuing for Lady Gaga, for gadget, for everything. And this is an anecdotal evidence about this growing middle class.
Pak Mirza, do you see it in deposits? The growing middle class, is that a reality?
Okay, Indonesia, I think the growth during the before 1998, I think only Java Islands, that's the source of growth in Indonesia. But now, because of the commodity booming plus decentralizations and young middle class, you see a growth of Indonesian economies all over the country. You can see the growth of credits. Even many provinces outside Java, they grew both GDP growth and credits growth above the national. So some provinces, they grow deposits, banks, credits 30%, 35%. And the GDP growth also grew above the national. That's why maybe from ourselves, we have to be concerned if there is an indication of overheating. That's why the central banks in June issued the loan-to-value ratio, which is good from the macro perspective, and also good to make the small players, the small finance company, the small banks, to understand about risk management, so that they have to limit their growth by, for example, by putting the down payment ruling and so on.
Thank you. We have presidential elections next year. I am not going to ask you who's going to be the next president, but I would ask you to just share with us, as foreigners observing, what should we be looking for? What are the milestones? Red flags, green flags? Some guidance, please.
Perhaps I would say that it is true there are some gimmick of this a kind of like economic nationalism usually before the election in order to attract the political support. And this is not only unique in Indonesia, but at the end of the day, I do always believe about this economic rationale will always be put in place. So let me give the reason why I believe this. Whoever the president is by 2014, yeah, he or she, in order to maintain the political support, should produce a job in order to reduce poverty. Okay? If he or she cannot produce a job or reduce poverty, then they won't gain the political support. This is the idea of this, maximization of the political support. If you want to produce a job, you have to create the economic growth 6.5 to 7%. 1% economic growth will require investment over GDP about 5.3. So if you want to grow by 7%, it means that your investment over GDP is probably about 37%. Our domestic saving is only 32% now. So whoever the president is, once they are in power later on, they have to be very realistic that by having the 7% economic growth, they have to be open for the foreigners. So I don't see a sort of like a major risk towards that. But maybe during the election or before the election, that kind of things always happen. It reminds me with the situation in Brazil. If you recall, President Cardoso was the founding father of the dependency theory. But when he was in power, the first thing he did is privatize the state-owned enterprise. So at the end of the day, the economic rationale will lead the country into the things that the good economic policy.
I've hogged the questions so far, and I realize time moves on. Questions from the audience, please. There's a hand just down here.
May I ask an economic question? Sort of for a casual observer in Indonesia, I see very strong credit growth, current account deficit, very strong domestic demand, anecdotes of overheating, and simple question is, shouldn't interest rates be much higher?
Sorry?
Shouldn't interest rates be much higher?
Pak Khatib, can you do that one and as brief as possible?
I do have my own answer to it. I cannot speak on behalf of the central bank. That's my problem. Let me give my personal view on this. I think in terms of monetary, the central bank is a bit too accommodative on monetary policy. That's my personal view, but it doesn't reflect the position of the central bank. I entirely agree with you. If you look at the problem of this current account deficit, the expansion of the credit cost, that certainly maybe the central bank need to sort of like do some adjustment about the monetary policy, which is somehow the central bank did actually since 6 months ago probably, by introducing some macroprudential regulations to slower the credit growth. Yeah, maybe this is one of the instruments with this sort of like maybe the impact is quite different by raising the interest rate. But in my view, maybe it's a bit too accommodative on monetary policy.
Just one very quick point, I think, which has broad implications. I mean, my sense is that Bank Indonesia and a lot of central banks around the region and perhaps around the world pay too much attention to measured CPI inflation. Now, measured CPI inflation in Indonesia is very low by historical standards. But it's often the last thing to tell you that things are going wrong, if it ever does tell you that things are going wrong. And I think there's too much focus, not just in Indonesia, but in the Philippines, in Thailand, in the US as well, arguably on relatively low levels of inflation. And I'm not sure the lessons have been fully learned from the US housing bubble, the tech bubble. Pressures don't always show up, hardly ever, in fact, show up initially in consumer prices. They show up in asset prices. And that, I think, is a mistake that Bank Indonesia has made, and I think it's a mistake that other central banks around the region, are in danger of making now as well. I think they should all be probably tightening policy. It's nice to see 6-7% growth rates, but the question you've got to ask yourself is that sustainable in the long term? And I think it probably isn't, unfortunately, yet.
questions at the back there. Yep.
What is the latest corruptions and bribery situation in Indonesia? Because I've heard that the Indonesia equivalent of Hong Kong ICAC has recently arrested the deputy police chief. So I just want to know the latest development. Thank you.
Well, let me give because we conducted the research 2 times. When we launched the decentralization in 2001, we conducted the research for 1,500, I was at the University of Indonesia at the time, 1,500 companies all over Indonesia. And we found out that the extra cost to the total production cost, extra cost means anything that you have to pay besides the legal tax, basically bribe, was 12% of the total production costs, 12%. But when we launched the similar research back on 2007, so about 7 years after the decentralization, the share of extra costs declined to become 8%. And one of the explanations is because there was a competition among the local government to attract investment. So somehow this competition reduced corruption. Unfortunately, the level of corruption at the national level remained constant because you cannot introduce competitor for tax office or custom, right? So this is the situation. But one thing that I would like to add, I think the issue of corruption per se is not really the big issues. The most difficult one is the predictability. Yeah, because in the past, if you recall, under the Suharto, we had this lot of corruption, but the economy still grew by about 8%. Because at that time, the corruption, if you want to bribe, you went to the single family and everything will be settled. So that's what we had this, efficient corruption. But nowadays, with the fragmentation of power, you have to deal with the many agents. So your transaction cost per bribe is increasing. So one thing that we learned on that process, there is something worse than organized corruption, which is unorganized corruption. But, you know, so if you ask me, how can we handle this? That is why at the investment board, every year, we create a sort of like competition among the local government in providing good investment climate. And I reward them by liaising the foreign investor to come to the region. So I do believe with this competition will somehow reduce corruption.
Maybe I can add on the corruptions here. You have to look at how Indonesians effort to fight the corruptions. To fight corruptions, it is never happened before that the anti-corruptions committee fighting with the police. And they fight, you know, the anti-corruption is investigating corruption in the police. It's never happened before. Now is the anti-corruption committee investigating corruption, the chairman of the president political party. So the chairman of Indonesia president political party now has been sidelined. It's never happened before. You have, so this is really the effort of all the Indonesians that commit on the reform, I think.
Mr. Bashri, what level of competition are you seeing from some of your neighbors, such as Malaysia or Thailand or even Philippines and in Vietnam, in terms of attracting foreign investments into their respective countries? Thank you.
Well, I think, of course, if we compare now, let me talk about number. Last year, if I'm not mistaken, Singapore was about $8.9 billion US. In our case, about 24.5. One of the attraction in our country is the vast population, is the size of the economy. And that's explained why the company like Toyota, L'Oreal just opened up its largest cosmetic factory in the world in Indonesia. Yeah? So they are looking for this huge domestic market. The other issue is we have a very relatively good macroeconomic stability. So you're talking probably, for example, like Vietnam. Yeah? Relatively, our inflation, even though despite there are some concern, our inflation is still relatively modest. Last year we had this 4.4%. The economy continued to grow by about 6.2%. And the important thing is also the debt to GDP is less than 24% now. And we've been able to maintain the budget deficit. So if you're talking about this, I would say that even though the competition is quite severe, but I'm quite optimistic that many companies start to look at Indonesia nowadays. Indonesia is back into radar screen. Yeah.
Ladies and gentlemen, I'm afraid we're out of time. On behalf of Credit Suisse, I'd like to thank Pak Khatib, Pak Mirza, and Pak Robert for a very insightful presentation.